We lost our connection there for a moment. Is it back? I don't know. It should say reconnecting. R L. Huh. I don't think our chart's reconnected. No, they didn't. Why? How about RLH6? Nope. We've lost our charts. Well, I unticked, there's a little box when you go to log in that says automatically reconnect. And I unticked mine yesterday because I was switching from demo to live. And anyway, you always want to let's see, workspaces, save as. Let me save this workspace real quick. 01 27 16. Okay. Hopefully it will save that. All right. And now I can log back in. Okay. We're going to be just fine. Methinks. Yeah. Okay, I was trying to switch this to the Russell before I was interrupted. Okay. All right. So, now again, this is a 5-minute chart. Why am I using a 5-minute chart? Because let's change it to a 10-minute chart. Let's change it to a 3-minute chart. 1 minute. 10-tick range. Okay. Let's go to Crude. Crude oil. Now, we got on the north side, we pulled back, but we still had a red CFMA1, and we had a red cycle. But look over here. Lag, retrace, lag, retrace. Up close, okay? If you want to wait for an up close, and there's no reason not to, but from the open of this candle, see, all systems are blue. Blue is bullish. for us with these indicators anyway. So the open is 31.67. $31.67, and the swing high is 32.38. $32.38 minus, what did I say, 31.67. So that's 70 ticks, $700 per contract. Now, that's not buying the low, and it's not selling the high. Okay. Now, I demonstrate this to hopefully help you to understand that I hear things about, oh, well, this thing worked, or it didn't work. I mean, if you're trading with a methodology or a system where it's, it's working today or it's not working today, that's not trading. That's like it's a form of gambling or something. And you'll do yourself a favor to, I'm not saying you have to, remember, we're not the only one skinning a cat. Plenty of them. But you have to be consistent. And all you have to understand, I spoke to someone this morning, really, really nice guy. He's been working really hard for 4 years to be profitable in the markets. And I mean, he's really given it his best go. And we were having I'm not going to get into what the whole conversation was about. He's not a partner of ours. I wish he was. I wish he had spent the last 4 years with us, and hopefully the story would have been different. But trading's not easy, but it's this simple. Okay? I don't know how to say it. Now, you go, well, why'd you take all those other things off? Those other things are designed to make this simplicity simpler. Okay? I mean, there may come a time when you don't really need this or this. But why would you not use, if you have a tool, use it, right? I mean, if I have an electric drill or an electric screwdriver, I'll probably use that as opposed to a manual one, just because it's more convenient, right? I mean, this just jumps out at you. Oh, okay. So that's over and over. Over and over and over. Now, one of the reasons that men want to make trading appear very complicated is because they can sell you more stuff, right? More stuff, more stuff, more stuff. Now, you go, well, yeah, but right there, I might have got stopped out. Well, yeah, but you got stopped out with profit. This is gold. So what do we need? We need 10 ticks. Gold pays $10 a tick. So we need 10 ticks. Yeah? So from 11.0, this candle here, 11.02, this green candle, right? Up to 11.03, that right there, that's your day. That green candle is $100 per contract. So's this one. So's that one. And if you're on the short side of the market, so is that one, and that one, and that one, and that one. Okay. I really feel compelled to impress upon everyone who's a part of the audience the simplicity, if you allow it to be. Something about our mind, the way it works, and this business draws people who come from very exacting backgrounds, airline pilots and doctors and engineers and scientists, where everything has to, all the pieces have to fit. Being a trader is almost more like being an artist than being a scientist. Yes, I know that math's very important, and our indicators are based on math and all of that, right? Let's see what bonds look like today. Now, bonds, you only need 4 ticks. So these are range candles. So each candle is 4 ticks tall. So to follow the 2420 blueprint, you just need one of those. Now, a better example would be this one, where there's no tail on either end. And since you're in the trade, I mean, I don't know, you could just stay in the trade until you get a down close. Or you could just stay in the trade until you close below the CFMA 1. All right, so we get our Fed announcement. The Fed does not change the rates. And the market, the initial reaction was a brief move higher, then lower, then we rallied back up. These are 30-minute candles, so that was the first half hour, now the second half hour. 4 minutes, we'll get a new candle, a new 30-minute candle. Now, hopefully your eye is drawn to this here. Okay. That would be a great place for the market to find some support. Let's watch it for a second, and then I got to run because I have some entering sessions to do. It's been an hour since the Fed announcement, so we talked earlier about, maybe 15 minutes, you wait, or if it's explosive, you might wait 30 or 45 minutes. It's entirely up to you. Okay, we hit the area. You'll see it. See that wick? Okay, so we're starting to bounce. If we close above this little box I drew, and again, I just drew a little rectangle because that's last time price got down into this area, it rallied, 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 and so, well, how long is it going to keep doing that? Until it stops. Well, isn't there some way to know? Some indicator, some oscillator, some ancient secret? No, there isn't. Now, here's what will happen is if this thing comes down here, we still got 2 minutes left. If price were to come down here, and then we were to close the hour back up above this little box and leave a wick hanging out down here, everybody would say what? They ran their stops. I want to throw a party someday, and I want to invite all the theys in the world. Because there's a lot of them, right? What's the old saying? Just because you're paranoid doesn't mean they're not out to get you. Okay. All right. We got to get out of here. It's been a long day. Let's see if there's any questions I did not. Oh, no, Joel, I didn't. No, I was asking that question of someone else. I didn't think you were saying you couldn't make money trading. No, I didn't. Now, the other person, I'm waiting to, let me see. Oh, I can't remember how okay. Let me just read these. Joel said, I'm not saying you can't make money trading. I'm just saying that the playing field isn't level. My initial comment was in reference to the CME cutting the euro's tick value in half for the HFT's benefit. Okay, like I said, you know a lot more about the CME and HFT, far more than I do, even though I wrote a somewhat humorous article. I have no real working knowledge of that. Question I have, how does that benefit the CME? Is because there are more trades, so more commissions are paid. I mean, what's the motivation? How do they get paid? Just in the activity that moves through the exchange, the increased amount of movement. Now, Eugene, your answer was, I asked you a yes or no question, and you answered no, and I can't remember for the life of me what the question was that I asked you. I think I asked you, have you stopped trading because of it? And I think you're saying no, that you didn't stop trading because of it. If I'm wrong, please correct me. Let's see. John B. said every time after a Fed announcement, there is such up and down movement. Isn't there a method to trade this, as it seems to be the same pattern? John, not that I'm aware of. Mike Reed, longtime friend of CFRN, and I met him in 2006. We launched the station in 2005. I met him in 2006. He's a great guy. If you've never been to his website, go there, pay him a visit, tradestalker.com. A lot of free content, articles he's written and videos, and read his life story. America's short on heroes. That man is a hero to me. And if you go and you read his story, you'll understand why. Now, here's Mike's theory, okay? And it's a theory, but the next time he's on the show, John, if you're here, remind me to ask him if he trades the Fed announcement anymore. See, they used to be really volatile. And then when there were no more surprises because there were no more bullets in the interest rate gun, then the moves weren't explosive. I mean, it was nothing to see the S&P run 50 points this way and then 50 points the other way. But Mike's working theory, the last time we talked about it, was the initial impulse wave, okay? Sometimes it's up, sometimes it's down. You don't see, you may not have been trading long enough to remember many times if the interest rate was raised and traders were expecting it to remain the same or to be lowered, and the Fed raised the rates, the initial spike would be to the downside. and then it would reverse and run in the opposite direction. And you would get your clock cleaned in both directions. I did more than once, and that's why I decided I'm just going to stay away from the Fed announcement. This is just my opinion. Mike says, well, let me tell you what Mike says. Mike says the initial impulse is usually the true direction that the market is going to ultimately go when the dust settles. Okay. What was the initial move here? Let's go down to a 1 minute. Let's not do it that way. Let's do it a different way. Oh, see there? Okay, so now support, right? We said how long will it continue to be support? Until it isn't. Okay? We got our new candle. We're trading below. Now, this could still move back up and leave a wick sticking out, and that will create that talk about, oh, they ran the stops. So let me go back to that other chart that I was just on. Let's go to the ES 1 minute. ESH. Okay, let's go back to 2 o'clock. Is that right? 2 o'clock? Nope. Nope. That's 2 o'clock. 1 minute might be too shallow. Let's go 5 minutes. Mike uses 5 minutes a lot. Okay. So here's the 2 o'clock candle. 5 minute candle, the first 5 minutes of the announcement. Okay. The previous 5 minute candle closed up. We opened here. And during this 5 minutes after the announcement came out, you really need to get inside of that 5 minute candle to see which way it moved first. It's obvious to see historically that it went leg, retrace, leg, retrace, leg. So as you can see, we're rallying up into, here's the first minute. So I would have to say that theory did not pan out in this case. If you're drilling all the way down to a 1 minute. Now if you're going with a 5 minute, because we had a doji or a belt hold candle there. In answer to your question, John, here's probably the simplest way to trade. If you're, number one, I don't recommend, let me clarify, I don't recommend trading any news event myself. That's just my personal preference. Okay, so this is an hourly chart. Okay. All right, and so this is the 2 o'clock candle. Okay. You could set up your bracket order to go long. See the high of the day was 1910. You could go long like 1915. You could set up your bracket, and on the short side, you could set up your bracket to go short. Oh, maybe 1860. Now, Michael, I don't think he does it anymore, but for a while there, he would trade the crude inventories when they came out on Wednesday morning. I don't think they've been doing that of late. The problem with trying to trade these major economic events is you get the whipsaw effect. So, I mean, you could have on a long trade, but you got to use a stop. And so you could be correct in your analysis that the market's going to go higher, but before it goes higher, or maybe it goes higher, triggers you in, then it comes back, stops you out, and then continues higher, or vice versa. So, because it's there are people who specialize in trading news. That's their thing. That's what they do, and it's just not my forte. I tried it, just like I think every trader tries everything in the beginning. Blue and climbing. Open of that candle is 68.75. Call it 69. And the first close back underneath it. Hang on. If I don't write it down. The open of that candle was 1868.75, so we'll call it 1869. 1869. And now the first candle to close back below, see, it's that the symmetry is gone. We're blue and climbing, and so the low here is 1887.75. So let's just call it 1887. From 69 to 87, we have a nice 8-point move. And it this particular trade, if you had traded that, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 hours to pick up 8 points. What time of day was that? The trade began at 6 a.m. and then you were out at 4 o'clock. This was yesterday's market. This is today's market here. All right. Let's see. Dwayne, when do you determine what indicators you use? As I don't see a lot of your indicators on the chart now. Michael, I don't really use, if I'm trading the Fortech range chart, I'll use the same indicators that we use in the live trading room. This is... Look at this thing. We're dropping nice. Now, so since we didn't find support there, where's the next spot we could find support? Well, this swing low would have been a good spot, but it could still happen. So, in answer to your question, Michael G., for me, less is more, smallest amount of indicators, that I can get away with to help me keep it simple. Okay. So if this doesn't hold a support, then we have a good opportunity at a target here. So the way to trade that would be to then go to, let's see, this is the S&P. Now let's put this on the 4-tick range, get rid of all the drawing objects. CFRN, okay. Indicators, slingshot. Yeah, come on, you give it a chance to catch up. Okay, I'm going to get rid of this extra slingshot here. Okay, so I said all that to say this. Right here at 1873, we got a bearish cross on the 4-tick range chart. This is what we use in the live trading room every day. Now, we don't really get bearish divergence in its truest sense until here. And so there's your down close below the trend line, and then there's your trade. There. However, by looking at this larger time frame, we see that there's really nothing in the way of us getting down into this area here. Okay? Now, buyers can show up anytime. If you look right here, there was good support here for a long time, quite a number of hours, and then it finally gave way. Okay? So if we get past this area here, then I suggest this as a good window of opportunity. Okay? If price comes this far, we should see some early buying come in, because those who don't want to get left behind. Okay? We've had that discussion many times. Let's see. Okay, Joel's sharing with us what the Fed said. Unchanged initially, caused the rally. Reading further into the minutes indicated that a tightening was still on the table in March, and Fed is disregarding oil price movements. That's when the break started. Great, thanks, Joel. Joel also says the CME lives and dies with volume, and the more the HFTs can and will trade pays the bills. Okay, that makes perfect sense. Ever since they went public, and their stock has always done quite well. The decisions, ever since they went public, the decisions have been made for shareholders, not for customers. When the exchange was member-owned, all decisions were customer-based. Now, that's an interesting perspective. What year did the CME go public? And you might not know offhand. Okay, Guys, I don't see any other questions, and so I'm going to go. We did great in all the markets today. All the markets were very kind. Crude oil last night, our alert on crude. Crude was to be long above 31.20. Get it? Okay. So the first move up, 12 ticks. You need 10 ticks to be done for the day. And then the second move up took us up to 31.70. So that's 56 ticks, $560 per contract is what the market made available, right? But if you're trailing your stop, obviously you're not going to get out at 560. You're going to get out, based upon how closely you're trailing your stop. Important prices, important areas, almost always tested. So there we go once. There we go twice. And then here, remember the alert was 31.20. And so we need to get back below. And on this candle here, we get back below by 2 ticks. We get down to 31.18, and we go all the way up to 32.84. So from 31.20 to 32.20, that's $1,000 per contract. So, this was good for your points for the day. This was good for, well, the market made $560 per contract available on that move. And then we got back below the trigger by 2 ticks, ran again, and so we've done $1,000 plus on this move. Okay? And these are 30-minute candles, so that's an hour and a half. So S&P, Russell, Dow, gold, crude, everything had profit in it today. Wow. Now gold, look at the reaction to gold off of the Fed. Huh. What was the word on gold last night? Long above 1124. Long above 1124. In short, $11.24 and short below 11.18. So there was some money. Now this is that important prices, important areas. Down, down, back above the trigger, down, back above the trigger, down, back above the trigger, down, again and again and again. Okay, I got to run, guys. If I missed anything. Ed, thanks, Ed. Ed says that it was 2005 that the CME went public. Joel said he thought it was end of 2002. Demutualized about 24 months prior to that. Okay. All right, guys. Well, I appreciate all of your input. I appreciate all of your questions. And I appreciate, as always, the fact that you invite us into your homes, into your lives each and every day. You've been doing it now for over a decade, And honestly, I just don't know what I would do without you. I guess I'd figure out, so maybe I'd take up gardening. I don't know. Hey, thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.